Welcome to The Explainer. Today, we're going to dig into the story of a stock that looked like it was heading for disaster, only to pull off one of the most incredible one-day turnarounds you'll ever see. We're going to play detective and look at the charts to see how it all happened. So let's set the scene. On February 1st, this was the closing price of Fat Brand's stock, 29 cents. To put that in perspective, this was dangerously close to its all-time low. We're talking about a level that usually screams total and complete investor panic. And then this happened. A jump of more than 32% in a single day. I mean, think about that. For a stock that pretty much everyone had left for dead, this was an absolutely explosive move. But it wasn't just the price that went wild. Check this out. The trading volume, the number of shares that changed hands, was 40 times its recent average. 40x. That's not just a busy day. That is a monster surge in activity. So that's the big question, right? How does a stock that's basically on life support suddenly pull off a move like this? Well, to solve this puzzle, we have to go back and look at the crime scene right before the big event. And let me tell you, it was not a pretty picture. You see, before this massive jump, the story of Fat Brands was, well, pretty grim. It was just a long, steady, and really painful slide downwards. Just look at this comparison. The stock had lost over 97% of its value from its 52-week high. I mean, it was trading for pennies on the dollar compared to where it was just a year ago. That's a picture of total despair for anyone who'd been holding on. And this really drives the point home. The stock was completely underwater. Think of those averages, the 50-day and the 200-day, as the surface of the water. Well, the stock's price wasn't just a little bit under, it was way, way down in the deep, dark depths, far below any sign of positive momentum. So, in plain English, every single technical signal was flashing bright red. It was like all the chart experts were in a room, and every single one of them was pointing down, 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 down. The trend was not its friend. Okay, so if everything looked so terrible, what gives? Where in the world did this reversal come from? Well, the first big clue, the real smoking gun, was hidden in the volume. And wow, look at this chart. On that one day, over 187 million shares were traded. Like we said, that's more than 40 times normal. This wasn't just a busy day, you guys. This was a seismic event for the stock, a sign that something fundamental had just changed. A volume spike like this often points to one thing, an event traders call capitulation. It's the moment of maximum pain. It's when the last few sellers who've been holding on and hoping finally just give up. They throw in the towel and sell at any price just to be done with it. And often, that is the exact moment that the bargain hunters step in. And here's some backup for that theory. This number is from the money flow index. A reading this high, almost 93, is extreme. It basically tells us that a tidal wave of cash rushed into the stock on that day. This confirms that all that volume wasn't just noise. It was driven by some really aggressive buying. Okay, so we've got the huge volume spike. But were there other, more subtle clues hinting that a comeback was possible? Let's look at the other evidence that was building up, maybe even before that huge price jump. So, traders are always watching for these subtle shifts in momentum. And one of the classics is called a MACD crossover. Right as all this drama was unfolding, the MACD gave a bullish signal. It's basically a little flag that says the tug of war between buyers and sellers might be about to change direction. You can think of it like an early warning flare shot up into the sky. It's signaling, hey, that relentless selling that's been crushing this stock for months, it might finally be running out of gas. And on the flip side, it hints that a whole new team of buyers might be stepping onto the field, ready to absorb all those shares from the sellers who just gave up, and maybe, just maybe, start pushing the price back up. And it wasn't a one-off signal. A whole bunch of other momentum indicators, think of them like the speedometers on a dashboard, they all started moving at the same time. They were all swinging sharply out of the oversold danger zone, telling us the downward momentum was finally hitting the brakes. All right, so let's put all the clues together. We've got the historic volume, the massive price surge, and all these little momentum indicators starting to flip from bearish to bullish. So what's the verdict? Well, it leaves us with two competing stories. You've got the bull case, where the optimists are saying, this is it, we just saw a classic bottom, smart money is stepping in. But then you've got the bear case, where the skeptics are saying, whoa, hold on, one great day doesn't just erase a year of decline. This could easily just be a temporary bounce. For traders, the whole story now boils down to these key price levels. That pivot point around 34 cents is the immediate battleground. The next big test for the bulls is to break through that ceiling, the resistance at about 42 cents. But if it fails, that floor, the support at 21 cents has to hold, or this whole comeback could just fall apart. And that brings us to the official verdict from the technical report. It's a high-volume capitulation bounce. It's a fancy way of saying, yes, something huge and dramatic just happened. But it also comes with a warning that moves like this are famous for being wild, volatile, and super risky. And that really leaves us with a big question, doesn't it? The technical analysis helped us understand the how and the why behind this incredible day. But was this the real start of a new chapter for the stock? Or was it just a spectacular but temporary flash in the pan? The charts gave us the clues, but ultimately, the market is the one that gets to write the end of the story.